So now that we've covered a brief overview of fundamental analysis, it's time to shift our focus to something equally as important, if not more important, and that is technical analysis. Technical analysis is essentially what is happening with the stock on a chart. It's the price action of a stock motion on a chart. In fact, William O'Neill, the publisher of Investor's Business Daily, calls the stock chart human emotion on parade. And so if you look at this stock chart, it's a chart of Apple, you'll see a lot of markings that I've put on this stock chart, which tell me different things. They tell me the mood of people at certain times and the patterns that you can try to predict. Now, in going back and studying 150 years of patterns, William O'Neill, in his book How to Make Money in Stocks, has found quite a few different patterns that repeat themselves over and over and over. And that tells us that it's not the technology, and it's not the market, and it's not politics, and it's not the economy that drives the action of a stock, but rather it's the human emotion and how that human emotion translates to buys and sells over time. This is a weekly chart, and you'll see on this weekly chart right now that there's a lot of information. So if you look at this chart right now of Apple, you'll see that right now Apple is showing a candlestick, and that's what these are called, a candlestick that is moving upwards. This is a candlestick here that is moving downwards, and that's why it's red. Down here you'll see the volume, and you'll see some indexes and moving averages, things like that. All of these are technical factors, and technical factors are very important. For example, when you find a spot like this here at the bottom of a reversal, that's called a swing point. And you'll notice, eerily enough, how this swing point happened to repeat about 10 weeks earlier, right almost at the same spot. In other words, buyers were brave at that point and sellers were scared, and they traded stock right at that point, and the stock reversed. And the stock came up to a certain point and it reversed back down again, and you see another repeating of that pattern. That is a swing point. And now you'll see that swing point get tested. We'll talk about testing quite a bit as we explore more technical analysis. But you'll see patterns repeating over and over and over again, and it's our job to try to predict what those patterns will do after they repeat. If you want to know a little bit more about some of these patterns, you can take a look at our tutorials on those patterns. For example, this is what's called an ABCD, or a lightning bolt pattern. And it's very predictive in a lot of cases of what a stock wants to do over time. This is a prediction that we think Apple is going to go to approximately $600. And that's based on the symmetry that's in the market. And so looking at that, you'll see this moving average, a 50-day moving average, is a very important moving average. On a weekly chart, it's called the 10-week moving average. 10 weeks, 5 days a week, 50 days. Same thing here. This is a 40-week moving average. You'll see that it's moving down, which tells you over a long period of time, Apple has been moving down. But now that shorter period moving average, that red line right there, is moving up through the black line, that 200-day or that 40-week moving average. And you're seeing generally when that happens, it's time to take notice that that stock is trying to change its behavior. And when that stock changes its behavior, we want to change our behavior because things might be changing for us if we pay attention to it. So looking at technical analysis in the light of fundamental analysis is a key to being sure that you're getting more and more odds in your favor the more you study a stock. So it's better not to study 20 stocks and go an inch deep. It's better to study 1 or 2 stocks and go several feet deep into the data on those stocks, really understanding not just the fundamental factors, but these key technical factors as well.